thank you everyone, and yes, I am from Canberra. Apart from that, I think I'm a nice guy, and those traffic lights at Northbourne Avenue, they're a real pain in the neck when you miss them, but you know, we'll get there. But thanks everyone for coming so early this morning. I'm going to give a bit of a talk about change. Economics is all about change. Things deviate every day. One beautiful thing about being an economist is that whatever you sort of think about and forecast today, it probably changes tomorrow. It doesn't mean you're wrong, but it's very hard to anticipate what the Federal Reserve might do in the US. It's hard to anticipate what might happen in North Korea. It's hard to work out what's going to happen to Chinese demand for iron ore, which has an impact on the economy. So there's all these sorts of things that have an impact and cause change in our society, that impact on all of us. Small business, big business, individuals, everybody is affected by the economy. And one way that I like to sort of just look at things to put some sort of context on how the Australian economy is, how it's going, is to think back to the 1st of July last year, so the start of this financial year. The Australian Stock Exchange was 4,094 index points. Now that doesn't mean much, but today it's close to 4,900 index points. And you think, well, yeah, I know the stock market's done all right, that's pretty good, and my super fund's looking a little bit better, those sorts of things. But what that actually means, what that translates to, is the value of the Australian stock market has changed, it's increased by something close to $300 billion. It sort of matters, doesn't it, when you think of it like that, that we shareholders, either directly or through our superannuation, have made more money. It's good news. Similarly, when the rotten thing falls, you lose money. And that has an impact on how things go in our economy. So my talk today is about change and where things change and how things change. So the Australian economy, it's remarkable that we've had 21 years without a recession. No other country in the industrialised world has ever had that. Australia's never had it prior to these last 21 years. And I think we owe a debt to the economic policy makers, be they our friends at the Reserve Bank, just down the road at Martin Place, whichever direction Martin Place is from here, who have adjusted interest rates without fear or favour. They've hiked them, and those of us with a mortgage think, oh, aren't they rotten? But then they've cut them when things change. So in a sense, they've managed the business cycle very well, and something that probably not everyone would agree with, but I think all sides of politics in the last, well, I'd go back 30 years, have managed the economy very well. That we've had this objective of trying to get a budget surplus. Occasionally a deficit's okay. We've had tax reform. We've had changes in the way that the economy's run. So we've avoided a recession for 21 years. That's remarkable. It's absolutely fantastic, and sort of we're the envy of the world when you hear, well, the Prime Minister talking to Mr. Obama or David Cameron. They say, well, how did you do it? You know, what's happened? And of course, there's a bit of good luck and a bit of good management, but I'll touch on that in a minute. Australia's unemployment rate's really low. It's 5.5%. It's more than 10 years ago since we had an unemployment rate above 6%. Now, we know that in the Eurozone it's 12%. In Greece and Spain it's about 27%. So the benefit of this wonderful, sustained, strong economy is that we've got full employment. Basically, everyone who wants a job can get a job reasonably easily. That's great. Whereas in countries that have got high unemployment, you can't do that. Our incomes are rising. So the interesting thing at the bottom of this slide is that Australians now, in US dollar terms, are 50% richer than the average British person. Isn't that remarkable? 30 years ago, we were less rich than the average British person, and we're 25% richer than the average American. Isn't that extraordinary, that we've got this wealth that's come through unbroken economic growth, through the terms of trade and commodity prices lifting our incomes and these sorts of things. So Australia is now one of the richest, we Australians are one of the richest people in the world. In fact, I think there's only 5 countries in the world that have got a higher per capita GDP than us, and they are Luxembourg, Brunei, San Marino, and Norway, if I'm not mistaken. So not the economic powerhouses of the world that are ahead of us. So we're actually doing pretty well for a country of 23 million people. As I said, we've had some good luck. Gosh, China is the biggest driver of the recent boom in the economy for a couple of reasons. One, because they're growing so fast, they need a lot of raw materials, iron ore, coal to fire up their electricity generating plants, natural gas, these sorts of things. So the fact that we have very strong trade links with China has given us just money. It's just flowed in the door. You know, we're producing this iron ore and they're paying about 5 times more for it per tonne than they were 10 years ago. It's just free money for us. It's fantastic and it's found its way into our economy. The good luck is that that Chinese boom, and I suppose we can still call it a boom because it's still growing very strongly, has helped the rest of Asia expand. So we're seeing India grow. India's now, well, it's about to overtake Japan as the 3rd largest country in the world in terms of GDP. So India's growing. Isn't that great news that we've got big trade links with India? But then also South Korea, Malaysia, Indonesia, all the rest of it. So we've got this position now where 70% of our exports go to Asia. So the fact that we're geographically close and we're good friends with them is actually fantastic. And so the commodity price cycle's been great news as well. So here's a couple of charts. Sorry, James, I had to put a few charts in because I can't not put a few charts. I'm an economist, come on. You can hopefully see from the left one, exports by destination. And this just illustrates what I've been trying to say. And just to bring it down to a couple of really clear pictures, I hope. That chart on the left-hand side starts in 1999, so about 13, 14 years ago. And what you can see from that is that the thin blue line, we were exporting less than 5% of our total export base was to China. Now it's 25%. Isn't that remarkable? That's a huge shift. And dare I say it, if we were to fast forward another or add on another 5 years, we'd be, you know, quite a deal higher than that. China's booming. They want our stuff. They want to pay us lots of money for it. That's great news. Probably a bit less obvious, and I should have made these lines a bit thicker, sorry, but on that bottom pale blue line is India. Sort of often not spoken about a lot in our financial media. I think it should be looked at a whole lot more because, as I said, it's almost the 3rd largest country in the world now. It's, you know, it's bigger than Japan, you know, much bigger than Germany and the UK. Our trade with them 15 years ago was almost nothing. It's now 5 or 6% of total trade. So it's growing. It's had a bit of a dip because India's had a bit of an economic slowdown, but we're still exporting a lot to India. And look at what were our 2 traditional markets. EU27 is the Eurozone. 15 years ago it was 15%, now it's 10%, and good old US is also sliding. They matter, but in decreasing importance. That's the change that's occurring. And as I said, dare I say, if I were to extend these charts out 5 years, or we're back here in 5 years' time to have a look at an update of these charts, Euro and US will be falling, India and China will still be growing, and then you've got the rest of Asia, Japan strong, South Korea growing. You might even put in Indonesia there because they're sort of an emerging trading partner of ours. And on that right-hand chart, there's just a graphic illustration of commodity prices. Wow, that's the boom. If you look back even 10 years ago, this is an index of a bunch of commodity prices. So gold, oil, iron ore, wheat, wool, all that sort of stuff. That index was at about 30 index points. It's now at about 85 or 90. So our commodity price cycle's trebled. And for a commodity producer like Australia, as I said, it's free money. So I said we've had some good luck. Asia, commodity prices, those sorts of things. China's boom, our close trading partners. We've also had some good management. I mentioned before, the RBA, it's cut rates without fear or favour, it's hiked them without fear or favour, so they've kept their inflation target intact. In fact, we had the RBA meeting yesterday and they, no surprise, they left rates steady, but they put out this lovely statement. It's only 383 words, I think, their shortest statement in about 5 years, and it just said that they're happy to adjust rates lower if the economy were to weaken a little bit more. So they're on the front foot all the time, ready to change rates, as I said, without fear or favour, just to make sure that we continue to grow. We avoided recession in 08, 09 because the government did spend up big, and while we can quibble with pink bats and cheques and school halls and these sorts of things, at the end of the day, and having sort of seen firsthand some of the discussions that were going on, some of the banks were about to merge, if you can believe it. I think it's public knowledge now that on one weekend when Kevin Rudd was Prime Minister, Ken Henry, who was Treasury Secretary, Glenn Stevens, RBA Governor, and all the bank executives got together and they said, look, if we find out that the banking system collapses over the next weekend, you guys are merging, and that's it. And so we're putting aside all the 4 pillars policy, you know, the banking 4 pillars that they're not allowed to merge. They said, this is such a disaster. So we're going to mail out cheques to everybody. We're going to build school halls everywhere. And while, again, you can quibble about whether they were efficient or too much or too little, hey, at the end of the day, it saved 200,000 jobs and kept the economy growing. And amid all that, in fact, after that, all 3 big credit rating agencies gave us a AAA credit rating, which is the best in the world, and I think there's only 7 other countries that have a AAA credit rating. So that's great news. Now, changes, the mining boom. You're hearing a lot, I'm sure, about the end of the mining boom coming. And this chart sort of just pushing on the price cycle. You can see that particularly coal prices, which are on the 2 right-hand panels, are falling quite a lot. Iron ore prices were $170 a tonne. When this chart was ruled off, they were $128 or something, and they're now down to about $115 a tonne. So the prices are starting to fall, and that's just telling us that when you produce more stuff, so all this mining investment that we've seen in Western Australia and the like that's generated a strong economy, it's producing more iron ore. Economics 101, I'm trying to teach my year 11 daughter her economics, and I think she knows a bit more than I do on some of these things, but the demand curve and the supply curve change, so the price falls. And that's exactly what we're seeing as these mines are producing all this extra iron ore, for example, that the prices are coming off. It doesn't mean that China's slowing, it's just that we're producing so much more of it. And so are people in Mongolia and Africa and South America. So there's this global supply which is going to put prices down. So the mining boom is probably going to end. Western Australia, for so long the boom part of the Australian economy, it's slowing down. You wouldn't read about it, but its unemployment rate's risen by a percentage point in the last year. So something's happening there to see it slow down. It's the boom in retail spending and house prices in Perth, they've all come off the boil. So Western Australia might be in for a bit of a period of weakness, and good old New South Wales and Victoria, forever weak, will probably get a benefit from these low interest rates. So we, in the eastern states, so heavily dependent on housing, with low interest rates, are probably going to see house prices sort of pick up a bit, and that certainly helps us, helps our confidence and helps spending. Now here's a chart just very quickly. It's 100 years of change. Gosh, I had to get this chart from the Reserve Bank. I didn't do it myself, I promise. And there's a gap there when they didn't collect the data during World War II. But I just want to focus on 2 parts here. One is the purple or mauve-coloured line, which is non-government services. You can even just have a look from 1950, roughly. Things like banking and finance, aged care, healthcare, these sorts of things. We're spending more money on services. Entertainment, all those sorts of things is where the growth has come in the last 50-odd years. Then look at manufacturing. We used to have almost 30% of our economy manufacturing, now it's below 10. Those trends are continuing, those changes are occurring. And if I was to hazard a guess on where Australia is going to be in the next 3 years, 5 years, even 10 years, on what's going to be strong, which industries are going to be the ones that are going to be booming, benefiting from the changes that we're seeing in our economy, clearly it's aged care, disability and healthcare. We're all getting older, unfortunately. We do have government policy directed at raising money and spending money on disability care, so that's going to be a huge part of the cycle. And as I mentioned before, our wealth, one thing that wealthy people do is spend more on their retirement and aged care. So I'd hazard a guess that if we were to look at where the economy's growth is coming from over the next 5 years, it would be skewed very much towards that side of the economy. Also strong, well, banking and finance. Again, we've all got superannuation, we've all got, well, many people have mortgages, so banking and finance is something where the advisory role for our retirement money and all those other things is going to continue to be a strong part of the economy. And then I reckon there was actually a nice TV story on this the other night about Chinese inbound tourism to Australia, that it's growing very rapidly. So despite the strong dollar, Chinese are coming to Australia. They're rich, they've got plenty of money, they like Australia, and they're coming here. So I think tourism will recover from what's been a tough period because of the strong dollar. And then even things like retail and education will also do well. Medium, agriculture, still there. No one talks much about the farming sector anymore, but we're efficient, and I think both sides of politics are wanting to get that northern part of Australia and make it a food bowl for Asia. So that will be interesting to see how that develops. That's a long-run strategy to get the infrastructure there, but we could see agriculture kicking along as well. Now the weakness, poor old manufacturing, I think, in a long-run decline. Do you know that about 30 years ago, we used to make TVs in Australia? Can you believe it? And I'm glad we don't anymore because we're not good at it and we'd be paying too much for them. I think the car industry is going the same way, unfortunately, because we're not good at it and we Australians don't want to buy Australian-made cars. We prefer the Japanese ones or the European ones or something. So manufacturing is going to continue to decline unless you've got a niche market. So, Cochlear with their bionic ear and those sorts of things will do really well. but I think the broad-based manufacturing is going to weaken. Public service, oh gosh, Mr Abbott's going to chop that, so there's going to be some problems there, so I think that's where the industry weakness is going to occur. Aussie dollar. It's been the biggest issue, I reckon, in policy in the economy for the last, 3 years, 5 years. We got to 110 a short while ago, and that made holidays cheap, internet shopping cheap. So when you clicked on a US website and bought something, and it'll say $100 US, you took $5 off because it's only 95 Aussie dollars because we're at 105 or something like that. Now we're at 95 cents, you're adding that back in. So that's changing too. So maybe our friends at Harvey Norman and these other retailers locally will get a bit of a benefit because it's just not going to be quite worth our while if the dollar keeps falling to be buying our stuff overseas. But we're still going to be shopping more on the internet, and that's going to be another change that occurs. And we've seen even, again, don't want to pick on Jerry Harvey, but he's slowly come around to the story where he realises that people just don't go into a shop as much as they used to. They just click, 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 buy the thing and it's sent to their door. And the lower dollar will actually help him. So, in my view, you can probably gather this from the falling commodity prices that I was talking about before, iron ore prices coming down, our terms of trade falling, interest rates being cut. I think the dollar's going to fall and fall quite a lot more. The Reserve Bank said yesterday that the dollar's still overvalued, and I think they're right, but when the reality of all these investors around the world say, well, look, I'm going to sell my Aussie dollars, as we've seen in the past, when it falls, it usually falls quite quickly. It's fallen 7 cents in a month, and I reckon when we get to this time next year, it'll probably be 85 cents, something like that. And that will make us think more about our holidays in Bali and California. We're more likely to maybe go up to Queensland or something like that. So that'll change the tourism industry just from us locals, changing what we do and how we do it. Another big change. Tony Abbott, Prime Minister. Yep, well, all the public opinion polls suggest that. The betting market, no ad for Tom Waterhouse, but I'm a keen punter and I do look at the election odds, and he's shorter odds than black caviar. He's $1.03, I think it was. So yeah, he's going to win, unless he falls off or something. I don't know. But so there's a question there that we've got to think about, and because he's going to change. He's a very different person, not just personality. I don't care about people's personalities. I care about policy. But his policies are very different. He's going to cut the carbon tax, the mining tax, he's going to cut public servants, he's got a whole lot of plans, he's going to get a bigger budget surplus, and that's fine, but it does have consequences for how the economy does function. Some people say it'll give a confidence boost because he's a good economic manager, or he will be a good economic manager. Other people say, gosh, we've just learned from Europe that fiscal austerity, cuts and tax hikes and these sorts of things are bad for the economy. So, the jury's out on that one, but it will be very, very different. Also, it looks as if he won't get a majority in the Senate, so it'll be the Greens and maybe a few independents in the Senate that might block his plans to get his legislation through, because to change the carbon and mining taxes, he's got to get legislation through. So if we get the Senate blocking things, do we have this another 6, 9, 12 months of political impasse? Not great if that happens. GST rise, something no one wants to talk about other than me. Maybe, if we've got a revenue problem in the economy, and Mr Hockey, I think, mentioned it once and hasn't mentioned it since, we do have to look at the tax base. So are we going to be sort of debating in a year or two changes to the GST? It's not the worst thing that can happen. So it'll be very different what occurs after the election. So the bottom line of all this is that we're still doing really well. There's a business cycle. We've got the Reserve Bank riding to the rescue with low rates to support economic growth. And we've got this incredible ability in Australia. The thing that's, for maybe a longer presentation one day, is that whenever one sector does poorly, another sector does well. So if we go back 10 years, mining was very weak, but that's when we had a housing boom. Then mining picked up and we had a housing slump. So I think we're going through that transition now where mining's falling, but other parts of the economy picking up. So I reckon we're going to have a 22nd, a 23rd and a 24th year of economic growth, and that's a fantastic thing. So while we can each focus on a little part of the economy that's not doing well, a little part that sort of isn't good for us, or we can notice that something's going wrong, from a big picture view of the economy, I think the changes that the policymakers bring in whenever they adjust the budget or adjust interest rates and these sorts of things do work. They do keep the economy growing. They keep the unemployment rate low, and at the end of the day, I think that's what economics is all about. So thanks very much for your time.